Okay, in this video I'm going to be explaining simple risk management rules on an $100 account. You can use these risk management rules on any other account, but in this video I'll be using $100 account as an example. Let's say, for example, you deposit into your account, let's say an $100 account. Now you can bring out your pen and paper so that you can follow through as I'm explaining. As you can see here, you open an $100 account. Now, how do you trade it? How do you follow signals with an $100 account? The first thing you need to do is to decide how much you want to risk per trade. Now, for me, I like dividing my account into 10. You can see the second point here says, in this example, I'll be risking $10 per trade. $10 per trade simply means that if I take a trade on one signal, and that signal goes against me, I'm going to be losing $10. And since I have $100, that means I will need to lose 10 times on a row before my $100 account is gone. So in order for me to blow my $100 account with this risk management, I need to lose 10 times on a row. So that's what I'm preparing my account for now. Now, if I'm to risk $10 per trade, what lot size should I use? Now, the lot size I'm going to use is I'm not just going to bring it out from my head. I'm going to use calculation to get the lot size I'm going to use. Now, in order for me to get that calculation, I've mentioned that earlier in one of our classes, but let me just summarize it again. The first thing you need to know is your stop loss pips. That's when I drop the signal. That place I put my stop loss, how many pips is there? You need to know that. Then the amount you are risking. For example, in this example, we mentioned that we're going to be risking $10 per trade. So know that, just note that in your notes. $10 is what we are risking. Now the stop loss pips, we don't know that one yet. Depends on the signal that I drop. Now, having known these two things, you are now going to use the formula. You are now going to use the formula amount to risk divided by stop loss. Whatever you get there, we'll label it as X. Then that X divided by 10 will give me the total lot size I'm going to use. Don't get confused. You've done this before. Now let's quickly look into an example. Let's say I've marked out an analysis. Let me go to my trading view now. Alright, this is one of the analysis we've traded some times ago. This is GBP JPY. Now, most times I might not really label out the parameters for these signals. I might just post a screenshot like this, and when I post a screenshot like this, forget the fact that this trade has already formed to this level. Sometimes all this candle you are seeing here wouldn't have formed out. Let's say it stop around somewhere here, and now I am marking my analysis here, hoping that this trade will fall into this box and climb up from here. Now I just post this picture, then I'll write it below. I'll write how many pips we are risking. Now, according to this picture, I'll still explain how you are going to understand picture when we get to using TradingView for marking and analysis. But for now, just pretend as if you know how to use TradingView. Now, when I mark this analysis, look at this place. I'm hoping that this trade is going to go up. I'm hoping that this trade will go up from this point. Now, in case this trade did not go up from this point, because I'm not the one controlling the market, this is just a technical analysis which can fail. Let's imagine that this trade now is going down. You can see this red point here, this place that they red. Let me zoom it out. This line, this red that this place stop, that's where my stop loss is. Meaning, if this trade should cross this box and keep coming down, that means I am wrong. I want it to take out my loss from here. Now, according to this signal, if you measure from this point to this point, imagine you know how to measure. You can see that this is 10 pips. In fact, it's written there. You see that place wrote 10.1. 10 pips. Meaning, I'm risking 10 pips. Now, this is the parameter for that 10 pips. See it here. This figure you are looking at here, 183.322. You can even write it down in your notes. This is how you follow signal. So just follow through. You write it down in your note now. Stop loss is equal to 183.322. That's your stop loss. You label it. Now our entry price entry price. Now this line here, this white line here, this is our entry price, and look at the figure here, it's labeled in white. You can write that one too out. Entry price is equal to 183, am I right? Yes, 183.423. Have you written it out? Okay, now we've known our entry point, we've known our stop loss. In fact, after writing that stop loss, you can put it into bracket minus 10 pips, meaning we are risking 10 pips. Now when I draw a signal like this, you observe that there are some green lines. You see 3 green lines. These 3 green lines means that this might take profit 1, this might take profit 2, and this might take profit 3. So now you can also write that out. Take profit 1, this point, this one here, this green line is my take profit 1. So let's see it on the chart. Write it out. TP1 183.879. TP2 is the following one, 183.993. Sorry, that's TP2. Yes, that's TP2. Then TP3 is this last one, 184.435. I hope you've written all of that. Okay, when you get to how to measure, you will know the distance between these entry points and our TPs, but just pretend as if you understand that. Now let me go back to what me have written earlier. So after writing it, your what you wrote should be like this. You see it, GBP JPY buy limit order. The meaning of buy limit order, I've already explained that one in one of our video. If you don't know it, you can go back to that screenshot, to that picture description, where I explained the different type of orders we have: the market execution, buy limit, buy stop, sell limit, sell stop. I think that's it. So now this is GBP JPY buy limit order. This is our price. Our price is at 183. I've written it out. TP1, if it gets to my TP1, that means I'm gaining 45 pips. If you get to my TP2, I'm gaining 57 pips. If you get to my TP3, I'm gaining 100 pips. But if it does not get to any of my TP and it decides to give me loss, I'm losing 10 pips. Have that at the back of your mind. Now let's go back to that formula. Remember, we are risking $10 and we don't know the lot size we are using yet. So now how do I determine the lot size I'm using? Now according to that example, remember, we know what we are risking, right? We are risking $10 and our stop loss is also at 10 pips. Now using this formula here that I mentioned, amount to risk, this is it here. Look at the example. Amount to risk is $10 divided by our stop loss. The stop loss is 10 pips. So $10 divided by 10 pips is 1. Now that 1 is our X according to the way I label it here. That 1 is our X. Now, and I said that X again divided by 10 will give me the total lot size. So 1 divided by 10 is equals to 0.1 lot size, meaning that my X is my 1, and I said that 1 again now divided by 10 will now give me 0.1. So this signal I want to trade now. Look at it, this signal, this GBP JPY signal I want to trade now. Whatever the position I want to open, when I add all the position together, my lot size must not exceed what? My total lot size must not exceed must not exceed 0.1. Now I might not decide that will I now open only one position. Let me open like 2 positions. Well, you can open as much position as you want, but the idea is the total position must not be more than 0.1, or else you are going to be risking more than $10. So now I will now say that 0 for 2 positions. Now that my 0.1, now I will now divide it into 2, meaning 0.05, 0.05. You see it? So that means I'm going to open 2 positions, and each of the position will be 0.05, 0.05. In that way, if you had 0.05 plus 0.05, the answer will give you 0.10, which is still the same thing as 0.1. So now write that out. You've gotten how you are going to open it. You are going to open 2 positions, and each position will be 0.05. Now how will you now enter the signal now on your MT4 app? Now you come to your MT4 app. This is how your MT4 app normally look like. Let's look at this first picture. This one here, this is the first picture. Now looking at this first picture, you can see that we are already on GBP JPY, Great Britain pound versus Japanese yen, and this is what will first come out: market execution. Then this is your lot size. If this lot size is not according to what you've already marked out to use, like in this example now, we've marked out to use 0.05. Don't forget, if this thing now is showing, let's say 1.00 or different thing, change this thing, change it to that lot size you calculate. In this example, the lot size we calculated is 0.05, so change it to 0.05. Then after changing it, change this your market execution, just click on it and change it to buy limit. Remember, the signal is for what? Look at it, the signal is buy limit order. So change that market execution to buy limit. Look at the second picture. This is the second picture. Now when you change this, the market execution to buy limit, it will bring out all this place you can label. You will see price, you will see this one here, this side here that has a red line, this is your stop loss. Why this one here that has the green line, this is your take profits, and this one that is labeled price, that is your price. So now that thing you've written earlier, look at it. You see this price? In this example, let me just use only take profit 1. Forget about take profit 2 and take profit 3. We are going to use take profit 1 alone. Check this price. You see it, 183.423. That is what you will write in this price. You see it? It's the same. It must be the same thing. You write it there. As soon as you write the price, you go to the stop loss. See stop loss here, 183.322. You also write it here. Don't write it in this side though. Write it in this side. This is your stop loss side. This one that is labeled as red is your stop loss side. You write it here. Then your TP, let's say we're taking TP1 for example. TP1 183.879. You write it here. As soon as you finish writing all those things, you click on place. See this place? You click on place. The thing will just load. Boom. It will enter. As soon as you put it, that one you have done it for just one position. Remember, it's 2 positions you want to do. You will do it again. This same thing that we just did, you do it again for 2 positions. But one thing you need to know is, in case you are maybe targeting 3 positions or 2 positions, you cannot decide that okay, your second position you will not use TP1, you are going to use TP2. That one is depending on what you want. But in this example, I want to imagine that I'm only using TP1. So now, as soon as you open it twice, you do that thing twice, this is what you will see. See the third picture here now. You see it. I've opened the first position, I've opened the second position. You can see this 0.05, that's my lot size. This one 0.05, that's my lot size. And I'm opening it at the same entry price. Are you seeing it? This one that is showing here, this is where the current market price is. So I've already opened the 2. Bam, bam, it has been opened. Now this is how your chart will look like. Can you see it? This is it here. This place you are seeing buy limit 0.05. That's where I put that's my entry price. 2 positions are there. This place is stop loss. This one is take profit. You see it? In this example, you can see that it has hit our take profit 1, take profit 2, even take profit 3. Everything don't smash, but forget about that. This is just an example. So as soon as you open it, your mind, just relax your mind. You already know that in case this thing goes on loss, you are not going to lose more than $10. But what if it goes on profit? What are you gaining? Now let's go back to our picture description. In case of loss, let's just talk about in case of loss now. In case this thing goes on loss, remember you are using 0.05, 2 positions. Let's calculate it. 0.05 times 2 positions is 0.1, meaning the total lot size you use is 0.1. And if you want to get your value per pip, remember what I taught you in the last one. Anything you want to get value per pip, you will multiply that your lot size times 10. That will be your value per pip. That's what I did here. 0.1 times 10, which will give me 1. Meaning, as that thing go 1 pip against me, I'm going to be losing total of $1 on the 2 position. But since I put my stop loss at 10 pips against me, that means if that trade go 10 pips against me, I'm going to lose. That means I'm going to lose a total of $10. since it's two position, I'll be losing $5 on one position, $5 on the second position, total of $10. That is it. But in case this thing goes on profit for me, remember, take profit one is at what? See it. Take profit one is 45 pips. You see that? Now let's imagine that this trade goes on profit for me. What will I gain? See it. 0.05 times 2 position, which is 0.1. Now 0.1 is the total loss size. 0.1 times 10, that means I'm gaining $1 per pip. And since the thing went 45 pips, if you set your TP at 45 pips for the two position, as soon as you just get to that place, you are not the one that will even close it. The thing will just close by itself, bam, and you are gaining 45 pips. Remember, you risk 10 to gain 45. That's roughly above 4 times 4 of what you are risking. So that your $100 account now, since you've gained $45 now, that your $100 account will now turn to $145. You now wait for the next signal. So that's just the idea of how you follow signal. So when you understand how to follow the signal properly this way, you know that yes, risk management, we are working on risk management. So imagine you now say you want to wait for TP1, TP2, or let's say you put all your TP at TP3, although that one is your choice. It's not every time it gets to all the TP. But in this example now, you can see it got to my TP1 and TP3. This is TP1, TP2, this is TP3. It got to TP3 and even plunge above it. And this TP3 is about it. You see, this is 100 pips. 100 pips. So imagine you now calculate it, two position, 100 pips. That means you are getting 200. That's very, very okay. That's very, very okay. So this is how you are going to guide your account from now on. Always know what you are risking. It's not by force that you must divide your account by 10. I know some people that divide their account by 5. But me, at least, I believe nothing will make me lose 10 times on a row. That's why I divide my account by 10. So if I have a $100 account, I'll be risking $10 per trade. If I have a $500 account, I'll be risking $50 per trade. That is just my risk management. And this is the calculation. This is how I'm going to calculate everything I'm going to use in trading it. So I hope you understand this video. If you don't understand, if you have any question, you can drop me your question in my DM.